This is Peter Sparreboom, and I welcome you to the fourth module of the course on inclusive digital transformation. This module covers innovation, which, as we have seen according to the African Union, is the third pillar of the digital economy. Innovation is an essential driver of economic growth, job creation, human development, and poverty reduction. Entrepreneurs and startups play an important role in innovation. The word startup is most frequently used for a specific type of business venture, namely that which is technology-oriented, versus a more traditional business venture such as a retail store. Of the 22% of Africa's working-age population that are starting businesses, only 1/5 are innovating, in the sense of introducing new products and services. While the female entrepreneurship rate in Africa is above the world average at 27%, the highest in the world, few African women attempt startups in the technology industry. Entrepreneurs who wish to start a business embark on a journey during which they move from idea to concept, monetizable concept, formal business concept, and finally, a business that a bank is willing to finance. Along the journey, entrepreneurs need access to a number of elements. This includes a conducive ecosystem, such as an innovation hub or cluster, entrepreneurship skills, funding, and, of course, as we saw in Module 2, an enabling policy and regulatory environment. In this module, we first present a number of key concepts around these elements. Then we present to what extent African entrepreneurs have access to these. Subsequently, we discuss what governments can do to further encourage and support digital innovation. And finally, we present international and regional developments that offer opportunities in the area of innovation. So what is the state of digital innovation in Africa? As I said, in the first place, digital innovators need a safe, conducive, and inspiring ecosystem to foster ideas. Such ecosystems include co-working spaces, innovation hubs, tech incubators, tech accelerators, fab labs, and technology clusters. In 2019, Africa counted at least 643 active hubs, with some large African cities hosting between 20 and 40 hubs each. The majority of these hubs are funded by big international tech companies, large African companies, and international donors. Originally, hubs were mostly sector agnostic, but over time they have evolved to offer more specialized support. The picture on the right shows the percentage of hubs that focus on a particular sector. Between 2018 and 2019, the number of tech hubs grew by 40%. At the same time, the churn rate has been high. 150 hubs have shut down since 2016. This denotes the lack of maturity and diversity of certain business models adopted across the continent and points to a need to coordinate efforts. In the second place, digital innovators need entrepreneurship skills if they want to bring their inventions to market. In fact, they need a combination of advanced digital skills and entrepreneurship skills, provided through a mix of education and training, mentoring, and coaching. The entrepreneurship education and training landscape in African countries is populated by a large variety of programs designed to reach a variety of different populations, and their goals vary just as widely. A study of entrepreneurship education and training in Ghana, Kenya, and Mozambique shows that the majority of entrepreneurship training programs target necessity-driven entrepreneurs, and only a small number focus on high-growth potential entrepreneurs. There's also a gap between what entrepreneurship education and training programs practice and what local stakeholders, including both successful and failed entrepreneurs and program participants, value. In particular, stakeholders value the building of entrepreneurial mindsets, exposure to the business community, and tailored and practice-oriented programs. In the third place, digital innovators need different types and amounts of funding at different stages along the journey to becoming a solid business that is eligible for commercial, small or medium-sized business loans. Pre-seed funding, the money to help digital innovators turn an idea into a monetizable concept, typically comes from the 3 F's: the startup's founders, friends, and family. Seed funding in the form of grants or equity comes from other individuals and organizations willing to take risk. In most countries in Africa, government agencies, donors, and large corporates offer grants to entrepreneurs, with some targeting innovative entrepreneurs. Many innovation hubs in Africa channel diversified funding to the startups they support. This is illustrated in the image on the slide. While the number of African entrepreneurs turned angel investor or venture capitalist is on the rise, it varies enormously per country. There's also increasing interest from private investors worldwide to inject capital into innovative, high-potential tech businesses in Africa. However, it is important to be aware that the 243 African tech startups that received international venture capital funding in 2019 represent only a tiny group of exceptionally promising tech entrepreneurs. Finally, and fourthly, digital innovators need an enabling environment to set up and operate a business. Sub-Saharan Africa remains one of the weak-performing regions on the Ease of Doing Business Index. A specific problem for digital businesses is the fact that different regulation in different countries results in a fragmented market. However, over the past decade, Sub-Saharan Africa has become the top-performing region globally in terms of regulatory reform. Regional initiatives to remove borders and harmonize regulation are expected to help overcome the problem of fragmented markets. The African Continental Free Trade Area will create major opportunities for startups to grow and scale up. Another important regulatory problem relates to intellectual property or IP. An important reason for innovators in Africa not to request any support from mentors or funders is the fear of losing their intellectual property. While many countries do have laws to protect IP, these laws are often poorly enforced. A possibly greater problem is that simply not enough people in Africa are registering their IP because local systems for IP registration are inaccessible, time-consuming, and difficult to use. Now, how to foster inclusive local digital innovation? African governments that wish to foster local digital innovation can work with stakeholders to develop a national innovation and entrepreneurship strategy. For this, they can build on the African Union's Science, Technology and Innovation Strategy for Africa 2024, with the mission to accelerate the transition of African countries to innovation-led and knowledge-based economies. African governments can support the development of local innovation ecosystems, support digital innovation and entrepreneurship skills development, and build an enabling environment that improves the ease of doing business and protects intellectual property rights. All these measures will help to convince international and local investors and funders to provide more capital to innovative entrepreneurs. As we saw, African tech hubs play an important role in building fledgling entrepreneurial ecosystems and helping startups. But these hubs struggle to earn revenue and become financially sustainable. Secondly, hubs are held back by the fact that the scope they have to connect companies with investors or providing them with a clear pathway to fundraising is limited. Governments can support innovation ecosystems in several ways. For example, by fostering hubs by or in partnership with local corporates or with local research centers, public-private partnerships for the establishment and operation of hubs, partnerships, knowledge transfer and collaboration between hubs. And another policy that has proven to be successful is the establishment of regional technology clusters. We also saw that digital innovators need entrepreneurship skills to be able to commercialize the products and services they design and to realize their potential for growth. Governments can support digital innovation and entrepreneurship skills in several ways. For example, they can map and analyze the available offer of entrepreneurship education and training. Then, with stakeholders, they can identify strengths and weaknesses in the available offer and jointly develop a national entrepreneurship education and training strategy. Governments can also support collaboration and coordination between entrepreneurship skills development programs. It is important that governments make sure the outcomes from implementation are monitored and evidence is used to improve the strategy. International and local investors benefit from all the support that governments can give to digital startups, including national innovation strategies, support for ecosystems, entrepreneurship skills development, and the enabling environment. Other measures that can help include business plan competitions that provide high potential digital innovators with starting capital as well as non-financial support, or fiscal measures that allow young enterprises to make a profit as soon as possible, such as tax exemptions for digital startups, and tax incentives for angel investors or venture capital funds that focus on innovative startups. Governments can also reserve certain public contracts to startups. We've seen that digital innovators need supportive regulation that makes it easy for them to set up and operate a business. Governments can help by working with stakeholders to make an inventory of business regulation currently obstructing the establishment and development of digital startups, prioritize laws and regulations that require reform, draft more supportive laws and regulation and get them approved, and finally implement the new laws and regulations. The rise of networks and alliances between hubs and ecosystem builders, illustrated in this picture, is creating new opportunities for digital innovation in Africa. Joining forces helps hubs to increase their exposure, avoid repetition, and share and adopt best practices. Under the Eye4Policy initiative, ecosystem leaders have created a policy vision and are building tools, methodologies, and trainings to support common interest formation and public policy co-creation at scale. Other opportunities for digital innovation arise from the emergence of African angel investors, which is contributing to the growth of available equity for African startups. Finally, The African Continental Free Trade Area is bound to create major opportunities for digital startups to scale. Thank you very much for listening, and I look forward to speaking to you in the next module.